A lot of what I try to preach is a team approach. And with that, what I mean by that is that if you put the right team of people together, we can help you implement your plan, and making sure that you have the right plan for you.
Welcome to Sterling Insights, Stand Out and Supercharge Your Assets, the go-to podcast for financial advisors aiming to grow their assets under management, stand out in a crowded market, and retain assets nearly forever. Are you advising high net worth clients who own appreciated capital assets? Do you want to help them sell without losing a quarter, a third, or even more of their hard-earned profits to capital gains taxes? Then this podcast is tailored for you. Each episode brings you the latest strategies and expert advice from leading financial advisors, seasoned attorneys, and experienced CPAs. Learn how to maximize your clients' wealth, minimize their taxes, and supercharge your advisory practice with actionable insights. Join us on Sterling Insights, Stand Out and Supercharge Your Assets, where you'll gain the knowledge and tools to set yourself apart and achieve unparalleled success in wealth management. Subscribe now and empower your practice for a brighter, more prosperous future. Welcome to Sterling Insights, Stand Out and Supercharge Your Assets. I'm your host, Roger Silk. Today's guest is Gary Heldt. Gary is the owner of Small Business Advisors in Gambrills, Maryland. He serves clients mainly in Maryland, Virginia, and the DC area. Gary has more than 30 years of experience providing business owners and individual clients with a wide range of accounting and consulting services. Gary, I want to certainly ask you if you want to add anything important that I missed in your bio that you want people to hear.
I appreciate you having me on, Roger.
I appreciate your being here.
Sure.
Tell us a little bit about how you got here, what you started out doing, and some of the more interesting things that have, as you've been in the business.
Sure. I guess I have to go back to high school. One of my football coaches taught a bookkeeping class, and he told me I should come take his class. So I started his class, and I'm going to date myself here. And we had one of those workbooks that you kind of tore the pages out of, and when you were done, you handed it in. So kind of before the first quarter was open, I was pretty much done with the book because it was kind of a, go as you go type thing. And, he had some instruction, but then we did a lot of this stuff on our own. And it got to the point where I was pretty much done. So he had his own bookkeeping business. So he started bringing stuff in for me to work on. And it just, to me, it was kind of like the Matrix. I just saw it and it made sense to me. From there, I thought I wanted to become an FBI agent. I saw the Untouchables and really thought, oh, wow, that's something pretty cool. And I started looking into it. And, at that point, my family didn't have the money. I wasn't going to law school. I wasn't interested in science. And then I found out that you can get into the FBI through accounting, doing some forensic accounting. So that's kind of the route that got me going into this. Went to Shepherd University and got my undergrad degree in accounting, and then came out and started working for an accounting firm, and then did some work for some nonprofits and some for-profits. All this time trying to get into the FBI, and they had a hiring freeze on. I went ahead and sat for my CPA, and then started really getting a lot of traction on that side of it, CFO and things like that for some companies. I finally decided, it's like, hey, look, I'm tired of working for everybody else, making everybody else a lot of money. Thought it was time for me to go out on my own. When I started my own firm in 2000, and ever since then, just kind of been off and running.
Did you ever do forensic accounting? Did you ever work for the FBI?
I did not. By the time they came back to me and ready for me to be able to move forward with them, I was well on into my accounting career, and thought I would have had to take too much of a pay cut to go work for them.
Gary, I think that accounting can be kind of a foreign language, a mystery for non-accountants.
Yeah.
Is there, if someone was listening to this and they wanted to, let's say they said, I want to have an intelligent, informed conversation with you. I'm never going to be an expert. I'm never going to be a CPA, but I want to know the difference between a debit and a credit. Um, is there something that you could recommend to people either read or listen to, or that kind of gives them, here's what accountants are talking about when they're talking about all these things?
Well, again, not all accountants are created equal. Depending on, it's just kind of like an attorney. There's different specialties in the accounting field. There's the bookkeeping side of things, which are more the debits and credits, and it is kind of counterintuitive because everybody's used to a bank and how banks have debits and credits. Well, the accounting world is just the opposite of that. So you
always struggle with that.
Exactly. With that in your bank account, the debits and credits and stuff. So, you have that side of things. You have the tax side of things, which is where we are with most of our stuff. You also do have the forensic accountant, which for anybody that doesn't know, that's kind of going back in history and recreating items and then tracing transactions to kind of find out where they came from. But I've kind of really settled in with businesses. Yes, we do a lot of personal tax returns, but we do a lot of stuff for businesses. So we will help them out with their bookkeeping, their accounting, their business consulting that needs to be done, but then also their taxes. And we try to do a lot of proactive tax planning with our business clients and our individuals.
And are you talking, your business clients are mostly small and medium-sized businesses, closely held?
Correct.
So would you say that more frequently your clients are cash basis taxpayers or accrual taxpayers?
I'm gonna tell you, we try to get most of them on accrual basis, but it really depends on the type of business they're in and which one, the cash or accrual, which one is going to benefit them better from a tax perspective.
Interesting. So my recollection, and I'm going to ask you this, is it right? You can go one way or the other much more easily than you can go from the other to the first one?
Yeah, it's a little bit easier going from cash to accrual than the other way around. You are allowed to change. There are forms that you would need to file to notify the IRS that you're changing from one to the other. But typically, I'm going to say, if you're going to change once, because by the time there's a lot of work to getting that done.
And what are the potential advantages to the client from, let's say you have a client who's a cash basis taxpayer, what potential, and obviously it's going to depend on case by case, but
sure,
maybe some common themes that maybe someone's listening and they say, hey, maybe I should give Gary a call to see if I can be helped out here.
Sure. The difference between cash and accrual, cash is just like it sounds. It's like I have to recognize revenue when I physically receive the money. I recognize my expenses when I actually pay them. Where accrual is, I recognize income when I bill somebody, and I recognize expenses when I'm billed. Doesn't make any difference when it gets paid. It's based on when it's actually received. So lots of times, the cash basis, lots of times, ends up being, a lot of times construction companies tend to be more on a cash basis. Personally, I think that more of the small to medium-sized businesses are on accrual because of, hey, I got all this work done, or I order equipment, or I order materials and stuff like that. So I'll be invoiced for that, when I order it. So I'll be able to write that off, when I order it, even though I may not have necessarily received it, but I get to write it off at that time. So lots of times the accrual basis matches up with people's budget a little bit easier than cash.
Would that be the case, for example, if a person has a business that basically has receivables because they're buying inventory or they're performing services that cost them money, and they're billing, but they're not collecting, you might be able to give them a one-time tax savings by switching, that then every year automatically by the nature of their business, that thing would keep getting pushed forward so that they would get that one-time benefit?
Correct. Yes, there could be a one-time benefit, in that way.
And just to give people an idea, and I don't know the answer, but what's a big one that you've seen where by making this relatively simple change, you're able to put a bunch of cash in somebody's pocket?
Most of the time we're doing it the other way, where people think about it at the end of the year. Lots of times people are trying to spend money at the end of the year to get the additional expenses into their business. If you're on a cash basis, you have to actually spend that cash to get that deduction. Where if I'm on accrual basis, then all I have to do is order it and get the invoice. I don't have to pay that invoice. So I get that extra 30, 45 days, whatever your terms are, to do that. So that's where I see more of it. But, again, there is a significant savings in that 1 year, depending on the size of your receivables. Because again, you're in the 24 to 32, 37% tax bracket. If you have $100,000 worth of receivables, just on the federal side of it, if you're in the 37% tax bracket, that's going to save you $37,000.
Well, Gary, I'm sure we could talk about accrual versus cash for the rest of this time, and probably people don't want to listen to it.
No.
But I'm getting the feeling that you have a laundry list of things that are kind of like what we just talked about. It's like totally non-controversial. It's just knowing what to do and how to do it. And is that fair, that a lot of what you do in helping people with their tax optimization is you just know this rule book, which has a zillion rules in it, and where to apply it? How much of that is correct?
Sure. That's a great question. With a lot of this, Roger, is people don't know what they don't know. And lots of times they go to a tax preparer or they'll go to a CPA, and they're very transactional, as in, okay, here's my stuff. We're in tax season mode, so all we're trying to do is get the return done and out the door. Well, what I try to do is sit down with people beforehand during the summer and really take a look at, okay, do you have the right entity structure for what you're trying to accomplish? Are you, in a kind of rule of thumb here, if your business is profiting over $50,000, you should not be a Schedule C, because you're not taking advantage of a whole lot of tax laws and tax strategies that are out there that you could if you were a different entity. There are a number of different retirement plans that people can get involved in, and many times they don't know it because the CPAs only know, hey, I know a 401k plan or maybe a SEP. There are defined benefit plans that allow a business owner to take advantage of some things and be able to put more away for themselves. There are other strategies. There's, cost segregation studies that can be done if you have commercial real estate or other rental real estate. There are hundreds, if not thousands, of different tax strategies that are out there that people can use that lots of times they don't because nobody's talked to them about it.
I want to pick up on something that you just mentioned, Gary, which, we know a lot of CPAs, we deal with a lot of them, a lot of really smart, hardworking people out there, but something that you said resonates with what I hear from CPAs, which is we have a ton of compliance work to do, and we would love to do this other stuff, helping our clients in more than just keeping their heads above water and our heads above water, but we're just constrained by time and resources. So what I wanted to ask you, Gary, is it sounds like what your focus is a little bit different. It sounds, and I don't want to put words in your mouth, but it sounds like you guys are really primarily focused on tax planning and tax implementation for your clients. And you don't necessarily have to be doing all of the regular reporting and compliance and all. Is that correct? Can someone have their regular CPA and use you guys?
Yeah, I mean, we do. We have some clients. I mean, again, we do still do a lot of compliance work, but we do
Isn't,
have some
isn't that what
clients.
the C in CPA stands for?
Yeah, exactly, exactly. We still have people that come to us. We help them build out a tax plan, and they can continue using their same CPA. Many times they end up switching because they kind of look at it, hey, if my CPA didn't tell me about this stuff, why do I want to stay with them? But sometimes it's like it makes sense because it's maybe somebody that they have internal that's doing their controller or something like that maybe isn't as well versed in tax as we are. And again, I always kind of equate this to just like an attorney, their specialties. And we one of our specialties is certainly is tax planning. And I really find it that many people don't do that, or they may ask their CPA to do tax planning for them. Their CPA is going to give them an idea or two type thing. But what they really need to do is invest some of their money into having somebody put together a tax plan. And I don't mean, hey, go buy that truck, that SUV before the end of the year because we'll be able to write that off. That's like a last minute quick fix. That's not doing true tax planning.
Right. So I'm curious about, so you guys are CPAs, which means you know awful lot about finance and financial statements and income and expenses and profits. How do you integrate sort of, because you can't do tax planning in a vacuum. There's a business there, and that business has, purpose of the business is to make a profit. How do you integrate like maybe the financial consulting end of it with the tax planning that you do for clients?
Sure. A lot of the financial accounting, I'm going to say bookkeeping side of it that needs to be done. Lots of times we still help them with that. And most of that stuff, we're doing on a tax basis, not necessarily, are they looking at things from a financing, again, we deal with the banks and stuff like that to help them with any financing or anything that they need to get done. But most business owners are worried about taxes. And what we try to do is, do the tax planning, but then we also try to put in layman's terms. Hey, this is what a balance sheet means. This is what you can find on the balance sheet. Here's your profit and loss. Don't just look at the bottom line because the bottom line doesn't tell you anything. Here's your cash flow statement. This is what you can learn from your cash flow statement. And those are the things to help them be able to manage their business better as compared to just waiting until the end of the year. At that point, they're just spitting out a tax return and moving down the road. So we really try to get them to think through stuff throughout the year to be able to plan. If you're not planning, then you're reacting. And if you're reacting, you're probably making mistakes or you're missing things for sure.
So you mentioned cash flow statements. When for your clients, would you typically be preparing all three statements, balance sheet, income statement, and cash flow statements for clients? And then on an annual basis, or how often would you be doing that?
So lots of times, we give that to them on a monthly basis. And then what we try to do is meet with the client on a quarterly basis to kind of go over where they are. We have some clients that we meet with more often, but we try to do quarterly. With our tax planning clients, we talk to them probably once a month, but meeting wise and seeing where they are according to the plans that we put together with them, we do that 3 times a year.
3 times a year. Okay. I know accounting and taxes are not usually in the same word as exciting, but I am going to guess that you have a number of stories that had really exciting outcomes from the point of view of your client who saved a ton.
Yeah.
And I was wondering if you have any of those, and obviously you got to protect the client confidentiality,
Sure.
but if there are any of those where you could give, say somebody's listening and it's like, well, this all been a little bit abstract. what are some cases where Gary has actually helped his clients, and how has he done it, and what's the outcome been? Obviously, without disclosing any confidential information.
Sure. With a lot of the clients, when we sit down with them, we start going through prior year tax returns and look at things. We're saving the clients on average about 42% on their tax bill.
So, for example, I just want to make sure I understand what you're saying. So if somebody had a $100,000 tax bill before they came to you, next year they would have roughly a $58,000 tax bill. You can save $52,000 on 100.
Correct.
That seems extremely impressive to me.
Oh, again, we're going back, and we're kind of going back to 101 stuff. Is the entity structure right for you? Because we really find, Roger, that many times people's, entity structure isn't what they need. They are, a sole proprietor. I had somebody come to me. They've been in business for 15 years. They're profiting about $300,000 a year, and they're a sole proprietor. So they're paying a whole lot of taxes that they don't really need to be paying, and they're not taking advantage of a lot of the different strategies. And if they were an S corp, and based on this individual, we were actually able to, we ended up saving them 55% on their taxes. So what we did was we said, okay, here's your tax return for 2023. Here's all the different tax strategies that we would recommend to you. This is what your tax return would look like if we did a side-by-side comparison. And the amount of taxes that we're able to save them was 55%. That's both federal and state.
Wow. Tell me that again, Gary. And that's not typical. It's not atypical.
No. I mean, and again, it ranges. And sometimes when we look at stuff, we're only able to save somebody, let's say 10 grand in their taxes, which to me, that's still a significant amount of money. It really depends on your situation. And that's one of the things I want people to understand. Your situation is going to be different. You got your next door neighbor that's going to tell you that they did X, Y, and Z. Again, they're telling you the good stuff. They're not telling you all the bad. And you really need to look at your situation as different than anybody else's. Anytime you're looking at your finances, you're looking at your investments, you're looking at anything, you want to make sure that you're having it looked at for you, because what works for Bob isn't going to work for me. That's not going to work for Tim. So you got to make sure that you're kind of looking at everything differently.
Is there an ideal client or a sweet spot where you really have had experience where you can help people the most?
I mean, it's really I'm going to say the small business owners. I mean, it's somebody that is going to have an adjusted gross income of, let's say 350,000 above. Those are the ones that we're able to, that we see the much larger tax savings with. And then we have between 150 to 250. That is also another sweet spot that we're able to hit on. Those we're not getting as large of savings, but it's still pretty significant in what we're able to do. Because again, Roger, it's always, how much do I get to keep at the end of the day? I'm not worried about that top line. That top line's great, but it's that bottom line and what we get to bring home every day is what's important.
So somebody comes in, they're new. Is there some particular thing or set of things that you share with pretty much every client that you have? Everybody comes in.
Depending on what we're going to do for the client, we do a lot of what I try to preach is a team approach. And with that, what I mean by that is if you put the right team of people together, we can help you implement your plan and making sure that you have the right plan for you. And what I mean by team of people, you have your CPA, you have your financial advisor, you have your estate attorney, you have your business attorney, your insurance broker. What's important is making sure that you let all of these people talk. The reason why you're letting all of us talk is because, Roger, somebody may come to you and say, hey, look, I have these large capital gains that I want to be able to do something with where I'm not getting killed in taxes. And you're helping talk to them about that. Well, if the CPA is not involved with it, or the estate attorney or the business attorney, when they're looking at all of these pieces, they're only giving bits and pieces to each of us. They're not giving us the whole picture. So because of that, we all need to talk, because what may be good for you may not be good for me, that may not be good for the estate attorney, that may not be good for the business attorney. So you need to let us all talk. And that is something that I really talk to all of our clients about, is making sure you let all of us talk.
Got it. Okay.
And that even goes for individuals, not necessarily business owners. And this is something that I found, this was just yesterday. I was reviewing somebody's tax return that they came to us, and I was reviewing it more from, hey, they want to move their business to us, and being able to give them a quote of what I think that it will cost for us to do their returns. And they had about $75,000 worth of capital loss carry forwards. And I said to them, it's like, hey, have you told your broker about this, that you have these large carry forwards? And they told me, they were like, no, well, they should already know that I have this. Well, and then I went back and looked at their return. They have a couple different brokerage accounts. So I got a feeling that there's some gains in there somewhere that these guys would certainly like to sell if they knew that there were these losses there that would offset the gains. So that's something where if that communication isn't happening, then they're not going to know.
Right. Gary, with all of your success, and you've got a lot of it, long track record, what do you find is your biggest challenge?
That's a good question. From a business side, and I think every business has this, is staffing. You want to make sure that you're finding the right people for the culture that you have built inside your company. And you want to make sure you find the right people that believe the same things that you do in servicing your clients. What I've done over the years is really have built, it's like, I want to build relationships with my clients. It's not something that's transactional. I want to have build that long-term relationships. And sometimes it's hard to find people that want to do that. So I would say that that's definitely one of our challenges. I think another challenge is trying to educate the clients and trying to educate potential clients on what can be done and what's out there. So we're definitely doing a lot of educating. One of the things I do is a monthly free webinar on different tax strategies, and we have a different one each month. I also send out weekly emails to our individual clients and a separate one to our business clients, just giving them some tax tips, strategies, and stuff like that. The one that I sent out to individuals today was trying to give them a little bit of a perspective on the election, and if Republicans would win, what are we looking at from a tax standpoint versus if the Democrats win, and just trying to nonpartisan, just saying, hey, look, these are what the two are saying that they're going to do. Here's the information for you. So again, just trying to educate.
And on that topic, where can our audience go, Gary, to learn more about you and your firm?
Sure. Our website is www.sbadvisors.cc. So again, it's SBADVISORS.cc, Charlie. And to be honest with you, I've never heard of anybody else having it since. So, or you could reach us at 410-721-6000. And, be more than happy to help anybody. I'm also on LinkedIn. And any questions that people have, we're here to help.
And you want to, I think it's on the screen, but you want to spell your last name?
Sure. It's HELDT. D as in David, T as in Tom. I wrote a book, The Right Team, The Right Plan. And this is one of the things that I was talking about earlier that I keep preaching, and it's, I discuss why it's important to make sure that you have the right team to help you create your plan and implement your plan.
Super. Is there anything else that you wanted to add that we didn't talk about?
No, Roger, I really appreciate the time with you today.
Well, thank you so much, Gary. It was very interesting. I appreciate having you on.
Thank you.
All right. Thanks. Take care. All right. Bye.
Bye.
Thank you for listening to another episode of Sterling Insights, Stand Out and Supercharge Your Assets, where we provide the info you need from successful leading financial advisors, lawyers, and CPAs. Your hosts, Roger and Catherine Silk, invite you to learn more about Sterling Foundation Management by visiting sterlingfoundations.com.